There's a moment before thunder, a strange stillness, when clouds hold their breath and time forgets to move. That's exactly where we are now. Suspended. Between collapse and coordination. Not crisis. Not calm. But perched on the edge of a financial handshake so vast, so silently orchestrated, it might already be unfolding. Welcome to FluxFolio Finance. Today, we're not just asking when to buy the dip. We're asking the question too many fear to speak aloud: when will the world be forced to fund America's debt? Not because it believes in the empire, but because the alternative is worse. It's April 2025, and the US economy isn't plunging, it's grinding. GDP growth has cooled to 1.8% in Q1, slipping from 2.5% just months ago, per the CBO. Consumer confidence has curdled, down to 65.2 on the expectations index, a level not seen in over a decade. Job openings? 7.4 million. The lowest since early 2021. Wall Street quivers, flinches, but does not fall. And in this stillness, Trump's tariffs grow teeth. 25% on China. 10% on everyone else. Some categories on Chinese goods face effective duties exceeding 104%. But these aren't guardrails. They're levers. They're pressure points designed not to protect, but to provoke. This is the Mar-a-Lago Accord in motion. As we've unpacked before, it's not a treaty. It's a tool. A Trump-era doctrine to force controlled disorder. Stir enough volatility and sooner or later, someone has to blink. Someone has to buy. And what's for sale? America's debt. Because behind the headlines and under the market surface, a darker truth pulses. $7.6 trillion in US Treasuries are set to mature in 2025. That's not a typo. That's 31% of all marketable US debt. $1.2 trillion of that comes due in just 2 quarters, June and September, per Treasury schedules. China's already pulling back, now down to $803 billion in holdings, the lowest in over a decade. Japan, still America's largest creditor at $1.1 trillion, is no longer buying with conviction. And the Fed? Once the ultimate backstop, it too is stepping away, trimming its balance sheet, letting bonds roll off. The Treasury marches on, rolling, issuing, praying. Pretending the theater is under control. But backstage? The machine is overheating. Enter basis trades, the quiet bomb inside the bond market. Today, hedge funds are swimming in over $1 trillion in basis trade exposure, according to Brookings. It's a simple trade: buy cash treasuries, short the futures, but one that relies on infinite liquidity and zero panic. If yields move too fast, spreads widen, and the whole construct becomes a margin call domino. This nearly imploded the US repo market in 2020. And now in 2025, the trades are bigger, faster, more fragile. And yet, it all feels deliberate. Because maybe the goal isn't to avoid a liquidity crisis. Maybe the goal is to orchestrate one, just big enough, just scary enough, to force the world back into the US Treasury market. And it's already happening. Look at Tether, now a $150 billion digital fortress, holding $118 billion in treasuries. One stablecoin, now bigger than most sovereign funds. Or Circle, quietly managing $45 billion in short-term US paper. This isn't decentralization. It's absorption. The very rebellion against fiat now props up the fiat itself. This is the new imperial design: create the crisis. Offer the cure. Sell the bonds. When the world can't afford chaos, it chooses compliance. And that compliance is paid for, auction by auction, in treasury paper. So how will the handshake arrive? It won't be announced. It won't be televised. You'll sense it, not in the headlines, but in the yield curve. When 10-year Treasury yields begin to fall, it won't be because inflation has been conquered. It will be because someone, somewhere, is buying. Not in retail-sized chunks. Not ETFs. But sovereigns. Funds. Shadow whales. You'll see the pressure ease in bond auctions, the bid-to-cover ratios quietly strengthen, and the volatility melt away, not from confidence, but from concession. You'll spot it when Japan signs a fresh defense agreement with the United States, and its Government Pension Investment Fund, PEIF, the world's largest, resumes strategic accumulation of long-dated U.S. Treasuries, not as investment, but as geopolitical tribute. You'll see it in South Korea, where new semiconductor trade agreements come bundled with quiet Treasury allocations, exporting chips, importing stability. Then it will spread. European central banks, after months of currency intervention, will let their guard down. They'll stop bracing the euro, stop bracing the pound, and start reallocating toward dollar-denominated safety. Not because they believe in Washington, but because the silence of chaos has become too loud. The whisper will return, dollar. And in parallel, beneath it all, the new barometers of financial power will begin to glow. Tether, that once ridiculed offshore stablecoin, will pass $150 billion in market cap, then $160 billion. A digital proxy for flight to safety, swelling not from crypto hype, but from global demand for short-term U.S. debt. As of April, $118 billion of Tether's reserves are already in Treasuries, making it one of America's largest private financiers. What began as a fringe token now functions as a synthetic sovereign fund, underwriting U.S. deficits 1 mint at a time. This isn't just finance. It's choreography. The handshake will not come with fanfare. It will unfold like mist, visible only in hindsight. But if you know where to look, bond markets, defense packs, stablecoin ledgers, you'll see the signatures forming long before the ink dries. These aren't coincidences. These are economic concessions. This is diplomacy, priced in basis points. The Mar-a-Lago Accord is not about restoring balance. It's about commanding allegiance. It's Bretton Woods with fewer economists, more TikToks, more tariffs, and infinitely more leverage. So what does this mean for you? It means you don't buy when the chart says oversold. You buy when the capital tide turns, when geopolitics whispers yield curve. When fear outweighs pride and liquidity no longer flows toward safety, but toward servitude. The handshake, when it comes, won't save the market. It will reprice the world. Watch for it. Feel for it. And when it happens, don't blink. This is FluxFolio Finance. Subscribe. Send this to the one friend who tracks bond auctions the way others follow celebrity gossip. And remember, the future of finance won't be shouted. It will be signed. We'll see you on the other side.